Hey everybody, it's Daniel here from InfoRest. Hope you're all doing well. So we gotta talk about the inflation report that came out for Canada. Very interesting because we have the Bank of Canada coming out to decide whether they're going to cut rates or not on June 5th. So it's not so far from today. Now, the report that came out for the Canadian CPI came out a little bit on the weaker side. If you look at the month-over-month numbers, basically in line. The core CPI number came in month-over-month lower than the previous number. The common CPI every year lower, the median CPI lower, trimmed CPI year-over-year in line. When we look at the year-over-year numbers for the headline CPI, which generally is talked about in the media and the news and the government and what have you, that number came in at, 2.7%, which is in line with the expectations. Now, when we look at the core Canadian core CPI year over year, that number came in at 1.6%. So very interesting here to see that the headline number coming out at 2.7 and the core number coming out at 1.6. So what does the trajectory look like? Well, when we look at the headline CPI number, it's just trading sideways, right? So we have it at 2.7%, which is slightly lower, which is lower than the previous report and lower than the February's number, which was about 2.8%. So slightly lower than that. So basically lower for the year so far. But we haven't seen a drastic move yet on that headline CPI. So still sitting around the 2.7. Now, the Fed likes to target a range when it comes to the inflation numbers, number between 2 to 3%. You may say, oh, look, the headline CPI is at 2.7%. It's in that range. However, they go for more of an average, and they like to see multiple reports before making a decision there, right? Now, what's very what's good news for maybe some of you out there, is the core number came in much lower, 1.6%. This number, and you see the trajectory on the core number just basically going downwards and declining quite rapidly, and we see that number all the way matches back to February of 2021, basically back to the pre-COVID levels. So you could argue there that, oh, fantastic core CPI number, when you exclude the volatile numbers from the report, that's looking like it's well below the 2% level. Thus, that opens the door for maybe Bank of Canada to do a rate cut in June. Now, speaking of rate cuts, the probability that the market is giving for June 5th rate cut is about a 53% chance. So in order for that number to really drastically change, there's got to be some sort of event or news that comes out that changes that probability. So until then, you could argue it's 50-50 for a June rate cut. Now, where we're heading towards in terms of inflation, yes, we're heading towards inflation going lower and lower, which basically opens the door that, yes, there's a high possibility that we could see at least minimum one rate cut. If not two, at least one rate cut for Bank of Canada, right? And that might be good news for anyone who is in real estate, anyone who's buying Canadian real estate or Canadian stocks or businesses or what have you. Good for maybe consumers. I mean, depends how you look at it, right? If you're renewing your mortgage, you're not getting the highest rate, but you're also not getting such an amazing rate also. We're talking about only a 0.25% change. And just because they cut rates here doesn't mean all of a sudden they're going to go on rampage mode and start cutting 100 basis points and we're going to go down to, 2% or lower in the interest rate. And that will be because inflation is still sticky. There are still signs when you look at the report and details that there's still stickiness in inflation, and definitely there's also risks that can cause inflation to uptick again. And they don't want to make the policy mistake like they did in 2021, letting inflation overshoot, and thus they had to really hike rates. So rates are still going to be relatively high, but 0.25% change, it just means a couple of dollars in terms of savings, in terms of your mortgage, if you're getting a new rate, especially if you're paying, especially if you're looking to renew, and especially if you're already paying a very high rate and you're looking to get it lower, it just means a couple of dollars of savings. So nothing massive, nothing big there. It's just the beginning of the rate cut cycle, which a lot of people are optimistic about. But there's a lot of things that come with this, with the rate cut cycle. And when they do begin the rate cut cycle, it doesn't happen drastically. It goes slowly. It takes baby steps in order to get to the very low rates. Like I've mentioned many times on my videos, and I said this over and over again, there would have to be some sort of massive event, black swan event, some sort of massive job losses that causes those 100 basis points of rate cuts and getting back to that 0% target. But if not, the economy is going to do fine, things are going to be fine. They don't expect rates are going to go really, really low that maybe some people on TikTok are talking about. That's very, very unlikely. So looking here at Stacks Canada, when we look at the CPI report, it talks about the CPI headline number is down from the previous report, and basically the reason is broad-based deceleration in headline CPI was led by food prices, services, and durable goods. The deceleration in the CPI was moderated by gasoline prices, which rose at a faster pace in April, plus 6.1%, versus in March, which was plus 4.5%. Excluding gasoline, all items CPI slowed to a 2.5% year-over-year increase, down from 2.8% in March. Now, when we look into the components of the CPI and break it down further, we see here that the food in March was 3%, and it came down significantly to 2.3%. Right, still up there, still inflation, but lower than the previous report. Shelter. Okay, here's the thing, right? What you got that stickiness? Where's that coming from? The shelter component, 6.4% in this report. Last report, it was at 6.5%. Not much of a difference there. When we look at household operations, furnishing, and equipment, right? Negative 0.1%. You have deflation happening there. So, and previous month was negative 2.3%. So definitely you can expect that the furnishing business, is going to be under a lot of trouble and already feeling a lot of pain, as you can see from the CPI report. Not many people are going out there and buying furniture and going crazy on upgrades of their homes. They're stepping back because of the cost of living and the mortgage rates and what have you. Clothing and footwear also minus 2.6%, right? You got to save some money, so you're not going to go and spend crazily on too much new cool Nike shoes or footwear or clothing or what have you. So minus 2.6% versus the last report of minus 2.7%. When we look at transportation, 3.1% versus last report was 3%. Health and personal care, 3% versus last report of 3.2%. Recreation, education, and reading, 1%. It's come down from the previous report of 1.9%. Alcoholic beverages, tobacco products, recreational cannabis, 3.4% versus March's 3.2%, right? Now, when we look at, so if you remember, I talked about food declining quite significantly from 3% down to 2.3% in this report, right? So where are those, where do you see the most deceleration and declines in grocery items? Well, let's look at it. Meat. Last report was 3.4%. This report came in at 1.8%. Other food products and non-alcoholic beverages, 2.1%. Last report was 3%. So quite the significant drop. You're seeing it in meat. You're seeing it in other food products and non-alcoholic beverages, right? Bakery and cereal products, down to 0.2%. It's almost close to the negative territory versus March's number of 0.8%. Fruit, fruit and nuts, minus 0.8% versus last report of 0.4%. Fish, seafood, other marine products, minus 1.8% versus last report, last month was negative 1%. Vegetables and vegetable preparations went up 3. So last report was 2.6%. This report came in at 3.3%. And dairy products came in this report 1.5%, and last report was 0.7%. So mostly, I mean, you've seen a decline in majority of the grocery items. Meat, it's still up there, but quite the decline versus the previous report, 3.4 down to 1.8%, right? We're seeing bakery, cereal products also dropping significantly. Fish, seafood already in the negative territory. Fruit and nuts also in the negative territory. So what does this all mean, right? You'll come out, you'll have people on TikTok come out and tell you that, hey, inflation's coming down, rate cuts are coming, it's all going to be amazing. Yes, temporarily, there might be optimism, housing prices might pick up a bit, euphoria in the markets, just look at the equity markets, but it doesn't necessarily mean all will be fine, right? We've seen this in history. The first rate cuts come slowly. Then the aggressive rate cuts come. Why? Because something is breaking. Because the shit is hitting the fan. So why all of a sudden, when grocery prices and food were such a big deal, such a big problem, why is it now we're seeing a decline? Why? Are the groceries, the companies out there, are they your new friends now? Do they just feel, oh, we made so much money, so let's give the peons some leg room so they can purchase some goods? No, it's very simple. It's demand destruction. As simple as that. We're hearing it, right? Job losses, big companies in Canada laying off workers, companies that have been established for years and years laying off significant amount of workers. You're hearing from the students, right? From part-time workers unable to find a job, right? You're hearing that maybe some people full-time who have been laid off are looking for part-time jobs or 2 jobs. You're hearing that it's coming due at the end of the year and next year for mortgage renewals, right? Yes, you get a rate cut, but it's not going to make a major difference. So there is pain to come down the road. The question is, how bad is it? Where does it come from? When does it come? We don't know. We'll find out soon, right? We'll find out soon or later. But eventually how this all leads to, when you look at probabilities, when you look at history and so on, there is a pickup, there's euphoria, but then eventually there is a plateau and then sudden silence and then the plunge, right? And you're seeing it from the CPI report here. You're seeing it from me breaking down the food and the groceries and the companies out there that saying, oh, we're cutting prices, right? What did Target say? This is related to the US. Target said they're cutting their prices on many products. Why? Are they your new best friend? No, come on guys. This is just common sense, right? So everyone's feeling the pain. Walmart has also mentioned it, that the rich are now showing up at Walmart and contributing to their higher earnings report. Everyone's feeling the pain of the higher rates, and everyone's hoping and praying for the central banks out there to cut rates, which they will, but not to a level where people think, right? So there's this hopium that, oh, as soon as they cut rates, then all will be well, everything to the moon, AMC, Dogecoin, Poopcoin, whatever it is, all to the moon, and everything will be fine. Maybe temporarily, short term wise, sure, you may be right, until the real banger kicks in, until the reality kicks in. It's a matter of time. Anyways, let me know what you guys think. Leave a comment below, subscribe, hit the like button, bell icon to be notified on the next video, and I'll see you guys around. Cheers, bye.